Should we buy Palantir stocks right now? The stock price is $32 and this year it has gone up by more than 60%. Ticker symbol PLTR has a market cap of 72 billion, revenue of 2 billion and a net income of 400 million. The earnings per share is 0.17. This makes the PE ratio to be at 190 times. This is a crazy valuation. The reason why Palantir is priced so high is because of their ability to break into the AI industry and serve very big clients like the government. So the PB ratio now is 17 times and the gross margin is 81%. This is a very positive sign. The reason is because Palantir is into technology, so once they have a fixed cost, whichever customers that they add on to it, they do not add on a lot of expenses. So as their customers base grow, the gross margin will be at such a number at an 80% rate. So for the Q2, the revenue has increased 27% and this is 5% more than what they have guided in their previous reports. So it's a very positive sign. Net income is 134 million and their customer count is up by 41%. You can see that their customer base is increasing tremendously and is supported by a few big players. Number one, the US government. The US government revenue has always been their main source of income previously and they wanted to break away from that. And the US government, even though they do not want to be dependent on that, they have been growing by 24% year on year. And in the international government revenue, it has also grown by 21%. This is the portion that they have a lot to celebrate about, which is their commercial revenue. Their commercial revenue is at 307 million. It has overtook the government revenue and is up 33% year on year. So Palantir is no longer dependent on just the government, but also they have customers based in the commercial area. So positive side, their full year's guidance have went up to 2.746 billion. This also created a surge in the share price recently. They have signed 27 deals worth $10 million around their valuation. So what we can see that there will be an incoming revenue of about 270 million at least plus minus. So this will help to boost their revenue. They also closed $1 billion of TCV and this is a 7th consecutive quarter of profitability. So this allows investors to have more confidence in Palantir knowing that they will be profitable from now on. Now the big issue about Palantir initially was still a huge dependency on government revenue, but we can see right now they have already shifted to the commercial revenue, but even then the government revenue still make about 50% of it. So this is what is known as concentration risk. So in event the customers, which is the government, choose to use another vendor, there will be a lot of issues. However, based on historical data, we know that once the government choose a vendor, even though they are asked to revise it, the chance of shifting is not that high because of all the high switching costs and all the data that's already in Palantir. The government is unlikely to change a vendor, but that being said, there's always the risk there. Now let's take a look at the valuation. Because Palantir is pretty new, they just IPO'd. So in 2020, that's where we can start to see their price to sales, price to earnings. And as of now, there isn't a 5 years average because they only had 4 years of data. If we just purely look at price to sales, it is 30 times. And we look at the past average, we can see that it is on the high side. However, when we look at PE ratio, it's 190 times, which is on the low side, but this is still a very huge number. So it's not going to sustain at 190 times. The earnings must catch up to match the price. So what it means is the current share price of Palantir has already factored in future growth. So coming to my favorite matrix, the price to book ratio, we can see for Palantir, it is priced about 30 times, 16 times, 5 times. This is a very huge range and is not conclusive. So even right now at the current PB of 17 times, I'm not able to ascertain whether is it overvalued or undervalued. We need more data to be able to understand whether Palantir is at a good valuation. And looking at the technicals, I will say that Palantir, it is a very strong uptrend right above their 200 days moving average, and the best time we could have entered will be around here when it bounced it off, but we would have never known that it's not going to be a breakdown. So right now, Palantir, in my opinion, it is too far away from their 200 days moving average. So even for a short-term play, it seems extremely risky. Coupled with unknown and high valuation, Palantir, even though it's a very strong company, I don't think it's a good time to enter right now for myself. So disclaimer, I do not own any Palantir. Do give your insights on the comments below on what you think. Should you buy Palantir stock right now?